Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So it's currently the 29th of March, 11 AM New York time as I'm recording. This will be a pre-recorded update coming out over on the 30th of March because today, the 30th of March, if you are watching, is my birthday. So I will be away from the channel today. So as it is my birthday, make sure to leave a like and a comment down below. Help me get these videos trending. Also, we're very close to 9.5 thousand subscribers. It'd be great if we hit this today on my birthday. So make sure you share the channel with your friends. But let's dive right into this content. Now, I want to talk about today how Bitcoin is currently between a rock and a hard place. Now, what I mean by that is Bitcoin is currently faced with two equally undesirable outcomes. And that's exactly what we're going to talk about right now. We're going to be looking at one chart. This is over on the Bitcoin CME Futures, traded on the Chicago Mercantile Exchange. So you all know what price gaps are. We've discussed this in great detail on the channel before. In fact, one of my most popular videos over on my channel is me explaining what the Bitcoin CME gaps are. So if you don't understand the Bitcoin CME gaps, I definitely recommend going and checking this video out. But as we can currently see, marked by these two blue boxes over on my screen right now, these are the two closest CME gaps for Bitcoin, which we have yet to fill. The first one is a tiny bit above our head at 29,150, and the next one to the downside is right here at 20,300. So why does this mean that Bitcoin is currently faced between two equally undesirable outcomes? Well, this is the main reason. Number one, what happens if we push up and fill this CME gap? Let's say Bitcoin goes to 29,200. Well, that pretty much gives us free reign to break back down and come and fill the next CME gap down at 20,150. If we break to the downside and we immediately fill this price gap at 20,160 without filling the 29,000 price gap to start with, then it may mean that Bitcoin will absolutely wreck the bulls and then bounce back up later to wreck the bears. And then at which point we're in a very slow, choppy market environment, which not a lot of traders will be profitable in. So this is really what I wanted to highlight right now. I think the best course of action if you are bearish in the market is to wish for this upper CME gap at 29,160 approximately to be filled, which will more or less give us free reign to come back down and fill the next CME gap to the downside. Now, I would like to highlight a lot of traders right now are maybe hoping that we don't ever come back down to 20,200, and also maybe they're hoping that we don't come back down to our lower CME gaps, because if you didn't know, we have CME gaps to fill at $11,200 and we also have CME gaps to fill at $9,600. Now, to the upside as well, we do have two further CME gaps. We have a CME gap at 36,000 and we've got a CME gap at 53,830. So, you know, if you're really bullish, you might be thinking, hey, we'll take out this CME gap. We might even push up to 36,000. If you do watch the channel, you will understand we do look at liquidity conditions in the market, and it doesn't seem like liquidity would currently be supportive of a move like that for the markets. We're very overextended on a lot of our oscillators. You can see right now, for example, the stochastic RSI, if I can pull this back over, we're currently playing out a weekly hidden bearish divergence, which if we look at the price action right now, you can see a top from the previous week. This may end up being something like this. We may not end up filling the CME gap at 29,200. Now, I personally hope that we do fill this CME gap because, like I said, I do not believe liquidity conditions would be supportive of us filling the next CME gap to the upside, 36,000. I think it's much more likely we'd grab liquidity from this market at 29,200 before filling the CME gap at 20,000. Like I said, we are also forming some hidden bearish divergence at this moment in time, where the price action on the weekly time frame, if we have topped out at 29,150 and we are making lower highs right now, if we don't come up and fill this CME gap at 29,150, 160 approximately, then what you can see is the price action is making a slight lower high. This is normally what happens in hidden bearish divergence. It doesn't have to be like super downtrending like this. What we're witnessing right now is a lower high on only about a $400 scale. And if we look at the stochastic RSI right now, you've got your oscillator pushing up very strongly. So you've got your oscillator heading up, but you've got the price action currently heading down for Bitcoin, which is indicative that at this moment in time, we are potentially forming a strong hidden bearish divergence on the weekly time frame. Now, outside of the hidden bearish divergence that we are currently forming, if we just forget the hidden bearish divergence, this only accounts for 2 data candles. What is more important, in my opinion, is the fact that if we are looking at the stochastic right now, we're absolutely skyrocketing. The short-term moving average, the blue one, is pretty much at 100 right now, and this is not typically fared too well for the markets. Now, in the last cross that we did have over on the stochastic RSI, this did predict a move back down to the downside. We broke down about 12%. We then did proceed to lollygag and have a bounce before continuing down about another 20% on the most recent correction. So even if you are bullish, even if you think, hey, we might fill this and make a lower high, 25,000, and then continue pushing back up, it's looking like probably about another 20% correction is going to be coming for the markets. Historically, if we look at other crosses over on the stochastic RSI, we had a cross right here, which presented about a 14 to 15% drop for the market. We had a cross right here, which presented about a 29 to 30% drop to the market. We had a cross right here, which presented about a 46% drop for the market. Over here, we had a cross which only broke us down about 7%. We bounced back up 10%, became more overextended, but then we continued to have a 47% drop after this small deviation over here. We had a cross right here about halfway through these two data points, where we proceeded to break down about 23%. And you get my gist. If we go back before then, you will see the stochastic acts a little bit different in bull market territory. But what I want to focus on right now is we've talked about how the oscillators are overextended. If you do watch the channel, we do keep up with a lot of liquidity conditions, CME liquidity tools for the stock market. I'm not going to be focusing on this today. Like I said, I really just want to focus on one chart. I present a lot of other opinions on my channel today. I just want to show you these two equally undesirable outcomes for Bitcoin. So once again, outcome number one, like I said, we push up to 29,200, fill this gap, and then it's very likely that we come down and fill the next gap at 20,200. And outcome number two, which in my opinion is either equally as undesirable or even more undesirable, is that we don't fill this CME gap at 20,150 approximately. We immediately break down, we continue with the hidden bearish divergence, and we come back down and fill this CME gap around about 20,200, 20,300, and then at which point we may find ourselves bouncing back up to fill this CME gap before coming down and filling ones later on in the market. And that would be pretty much meaning that since May, if we do something like this, we could have just been trading sideways for a whole year. And whether you're bullish or bearish, I think we can all agree this is not what we want from a trader's perspective. We want either a clear and decisive break to the upside or a clear and decisive break to the downside. This sideways choppy market is a little bit ungodly and a little bit untrading. Very unforgiving for most traders at this moment in time. So there we go. Outcome number one, we fill the first CME gap and break back down to fill the next one. Or outcome number two, we fill the original CME gap at 20,000 before potentially pushing up and filling this one. Now, I talked about the CME gaps to the upside. You know this, you know 36,000, you know 54,000. Now, at some point, of course, I think these are going to get filled. I don't think they're going to get filled in the short term. You may be interested to know that so far, bar this 1, 2, 3, 4, 5, 6 CME gaps on this chart right now, Bitcoin on the CME Futures has filled every single CME gap to date. And I believe coming into the future, at least for the next year or so, I do believe that we're going to fill this CME gap. I think we're going to fill this CME gap. I think we're going to fill this CME gap. I think we're going to fill this CME gap. And then coming into the bull run, we'll of course fill these CME gaps to the upside. Maybe we'll create a few CME gaps to the downside and come down and fill them during the rally. But if we go back at Bitcoin's history, you know, kind of saying maybe this time's different, maybe we won't fill 11,000, maybe we won't fill the CME gap down here at 9,700, would be going against what's happened on previous data that's been traded on these CME futures. You can see CME gaps here, CME gaps here, CME gaps here, CME gaps here, CME gaps here. We also, so, you know, you can see these CME gaps that were blasting up in the bull run. Obviously, as we broke down, we filled this CME gap and we filled this CME gap. You can see these CME gaps to the upside here. You know, we had CME gaps at 60,000, we had CME gaps at 49,000, and then we had CME gaps at 32,000. Now, you might have been looking at these ones and saying, hey, 60,000, this could have been the bull market top, but what did the markets decide to do? They decided to push up to 69,000 to fill this last CME gap. And then, of course, we broke to the downside and we filled this CME gap over here. So Bitcoin has literally filled all of its CME gaps in previous data traded over on the CME futures. If we come back, what you can see is, of course, you know, if we look at this level right here, Bitcoin on the CME futures broke down to $4,200. So what we know from this is if we're looking at previous data traded over on the CME futures, started trading round about here, pretty much at the top in 2017, coming into 2018. The top was 20,600 over on the CME futures. Now, I think it's pretty obvious to say that anything above 20,600, we broke to the upside, so we would have filled anything, if there was anything there, not that there was. But what you can see from then is the CME futures broke down to $4,205. So what we know is that any CME gaps that were formed in this area over here, so we had CME gap right here, we had a CME gap right here, we had a CME gap right here, we had a CME gap right here, CME gap right here, gap, 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 gap. All of these gaps that were built in this uptrend, these were all filled when we broke back down to 4,200. And the gaps to the upside, like right here and right here, this one was immediately filled. This gap right here at 8,600, as we broke to the downside, of course, we broke back up and filled that CME gap. So all of these CME gaps over here, we've literally filled every single CME gap. Since the CME started to trade, if we come over to the date tool, what you can see is up until this point where we formed this CME gap at $9,700, we had 945 days worth of data traded where we had 100% ratio of filling every CME gap. So I do think it would be a little bit unwise to potentially hope for a change of direction at this moment in time and potentially assume that we won't continue with this trend filling these CME gaps. So once again, just want to highlight, you can see an unfilled CME gap right here, 9,650. You can see a unfilled CME gap. There's actually a double CME gap right here. So, you know, the first CME gap is around about 11,400. The next CME gap is right here at 11,100. So these are CME gaps, in my opinion, that we will be coming down to in the rest of the bear market. So that's really what I wanted to talk about in this video, my friends. These two blue boxes being 29,150 and this CME gap down here at 20,300 are the two equally undesirable outcomes for Bitcoin. Even though I'm saying they're equally undesirable, maybe I'm just saying that because A Rock and a Hard Place sounds like a good title. At least it sounds like a better title than, you know, Bitcoin is between two situations where one is slightly better than the other. That's a little bit of a long title. These are pretty much two equally undesirable outcomes. I would personally prefer to see us break to the upside, hit 29,200, and then have free reign to come down and fill this 20,200 price gap. At which point, if we do come over to the daily time frame, you can see, you know, we did form actually a CME gap to the upside right here when Bitcoin was going on its most recent parabola from the bear market lows, around about 15,000 or so. What you can see is right here, boom, we broke to the upside. And what did we do? Before we continued up and made higher highs, we broke back down and filled this price gap. So ladies and gentlemen, so far, Bitcoin probably has about a 99% ratio of filling all of its CME gaps. At this moment in time, we only have 1, 2, 3, 4, 5, 6 unfilled CME gaps, which is why I'm letting you know these two are the closest ones. And it seems like Bitcoin has a decision to make very, very soon. That's all I've got for you today, my friends. All in all, while the markets have pushed up a little bit in the past 24 hours, 3% or so, since my last video, my thoughts haven't changed on my most recent video. We have pushed up a little bit. We have actually invalidated the bear flag that we talked about yesterday. We've actually pushed up to the top of this diamond top as well. If we come over to the bear flag, you can see, you know, this bear flag is no longer valid. We have pushed to the upside of this. So we will keep you up to date. Of course, if you have been looking at this video anyway, we presented more opinions than just what's happening on the 4-hour time frame. So really, everything that's happening in the higher time frames is still completely valid in my opinion. And what I will be looking at next is what happens with these two CME gaps, these two equally undesirable outcomes. So for today, my friends, that's all I've got. Like I said at the start of the video, if you're watching this today on the 30th of March, it is my birthday, so I will be away from the channel. It would be awesome if we could hit 9.5 thousand subscribers today. So if you are watching this, make sure to share the channel with your friends. If each and every single one of you shared the video with one of your friends, I'm sure we could easily smash 10,000 subscribers within a couple of days or so. So as always, if you appreciate the content, leave a like and a comment. This definitely boosts me on the YouTube algorithm. It helps the channel out much more than you could possibly imagine. If you want to further support the channel, click the join button and become a member today. Make sure to follow me over on Twitter at 618_cowboy, but I will leave it here. It's been your boy Cowboy Trades. I'm out, my friends. Peace.